Welcome to The Explainer. Today, we're jumping right into a very specific short-term trading strategy. It's all about scalping, making quick trades for small profits. We're going to walk through what's called the Tesla plus HMA method, step by step, using our source material as our guide. If you're a trader, you know how easy it is to get analysis paralysis. It can feel like you're just drowning in charts and indicators, right? Well, the source material we're looking at today offers up one potential solution, a system built on really specific rules. The whole point is to take the emotion and the guesswork out of your trading. Okay, so here's the game plan for this explainer. We're going to start with the basics, get our charts set up exactly right, then we'll learn the rules for buying and selling. And maybe most importantly, we'll figure out how to filter out the bad signals. We'll wrap it all up with a smart, responsible trading plan. All right, first things first, let's get to know the strategy itself. It's basically a combination of a few specific tools, all designed to help you spot short-term trends, which of course is perfect for scalping. Let's see what you'll need in your toolkit. So the heart of this strategy really comes down to two main indicators on a TradingView chart. First, there's a signal indicator called the Tesla Trading Robot. And let's be super clear, this has absolutely nothing to do with the car company. It's just what it's called. It's the thing that gives you the buy and sell signals. Second is the whole moving average, or HMA, which we're going to use as our trend filter. The source also suggests using Heiken Ashi candles, which kind of smooth out the price action to give you a clearer view of the trend. Okay, let's get into the setup. And I gotta tell you, this part is absolutely critical. According to the source, getting your indicator settings just right is the foundation for this whole thing. Get this wrong, and the rest won't work as it's supposed to. So for our trend filter, the HMA, the source points to two settings that you have to get right, no exceptions. First, the time frame is set to 1 hour. Now that gives us a bigger picture view of the main trend, even though we'll be trading on a much faster chart. But the most important number here is the length. And that magic number is 55. The length of the whole moving average has to be set to exactly 55. This isn't just some random number. The entire strategy is built and calibrated around this specific value. And here's what that final settings panel should look like. You want to double check that length is at 55 and time frame is on the 1 hour. The source also mentions you can pop over to the Style tab to make the line thicker or maybe change its color, just so it really stands out on your chart. Get this right and you're ready for the fun part, the rules of entry. All right, our chart is perfectly configured. Now let's break down the exact rules for taking a buy or a long position. This is where the discipline really comes into play. Okay, so there are 3 critical conditions that have to line up perfectly before you even think about clicking that buy button. First, you need a buy signal to pop up. Second, the candle that signal is on must close above the HMA line. And third, and this is a big one, this new buy signal has to be higher than the previous buy signal. And here you can see it all coming together in practice. A buy signal appears, check. The candle closes cleanly above that HMA line, check. And as that third rule demands, this signal is higher than the last one. When all 3 of those things happen, that's what validates the entry. All right, so we've got the buy side down. Now let's flip it over and look at the other side of the coin. The logic is pretty much identical, just inverted, for when you're looking to enter a sell or a short trade. And just like before, it's a 3-part checklist. You need a sell signal to appear. That signal candle has to close below the HMA line. And finally, to confirm we're still in a downtrend, this new sell signal must show up at a price that's lower than the previous sell signal. This chart from the source material is a perfect example. You can see that first sell signal appears, the trade plays out, and then a second valid sell signal shows up. Notice how it's below the HMA line and it's clearly lower than the first one. That's what confirms the downward momentum is still in play. Okay, now this next part, this is where the strategy goes from just good to potentially great. It's about moving beyond just blindly following signals and starting to actively filter them. And according to the source, this is the most crucial skill you can have for long-term success. So does that mean every single buy or sell signal that pops up is a green light to trade? The source material is crystal clear on this point. Absolutely not. In fact, learning to spot and ignore the invalid signals is just as important as knowing when to jump in. Look really closely at this example of an invalid trade. See, the system gave a sell signal, but look where it is compared to the last one. It's higher. According to our rules, that's a trap. It breaks that downward structure we need to see. So this signal, you just have to ignore it. You gotta burn this rule into your brain. It's your #1 filter. By forcing you to wait for a lower signal, it helps confirm that the downward momentum is for real, and it keeps you from getting tricked by a little bounce in a bigger downtrend. And you guessed it, the exact same logic applies on the buy side, just in reverse. A healthy uptrend needs to make higher highs. So with this strategy, you need to see higher buy signals. If a new buy signal shows up at a price that's lower than the previous one, that's a huge red flag. It's telling you that upward momentum might be running out of steam. Think of this rule as your shield for uptrends. Its whole purpose is to keep you out of choppy sideways markets, or even worse, to stop you from buying at the very top right before everything reverses. It forces you to trade only when there's real evidence that the upward momentum is continuing. So knowing the rules is one thing, right? But how you actually apply them in the real world with real money on the line, well, that's what separates success from failure. The source material is very direct about this, emphasizing a super disciplined plan for how to do it. The path to trading live, according to the source, is all about patience. So first things first, don't even think about using real money. Start with a demo account, paper trading, until you've successfully logged at least 50 profitable trades. You have to prove to yourself that you can be consistent. Only then should you consider going live, and even then, start small, with maybe just 1/10 of your capital, until you really get comfortable. And that really brings us to the big question this whole strategy poses, doesn't it? When you have a system that's built on simple, clear, logical rules, the biggest unknown variable left in the equation is you. It really highlights that maybe, just maybe, the hardest part of trading isn't finding the right strategy, but actually finding the discipline to follow it every single time.